Hi, everyone. Thank you so much for being here today. My name is Melanie Ewan. I'm one of the co-founders and lead advisors at Volition, and I will be hosting today's session. So Sandra will be here as our guest and taking up a majority of this speaking space, as she should be. She has incredible insights, and I will essentially just be here passing on your questions to her and facilitating that end of it. So it's kind of an interview style AMA. Therefore, so I run our communications and our community management, event management. So it's been a very busy month of making, kind of bringing everything virtual. And I've been wanting to do these kinds of AMAs for a very long time. So really excited to be able to do this. And kind of our why behind these AMAs is to help mitigate the impact of COVID for those in our community. And not just COVID, but also COVID and going into the future, which obviously we don't know exactly what that looks like yet, but we want to help mitigate the impact of whatever that looks like through knowledge sharing and these opportunities for connection. So we have these AMAs. We also have our virtual pitch events that we do, which these days is generally one per week. And then we also have virtual co-working and are working on some other interview style kind of opportunities, and we'll see what else comes up. If you're not familiar with us, Volition is an international advising firm for startups and entrepreneurs. There's 11 different advisors that each specialize in kind of a different common pain point or knowledge gap in the startup space. So the goal of the AMAs is to bring on a different advisor each week who speaks to their area of expertise or something that's kind of their soapbox that they like to get up and talk about and makes them really excited and fired up to chat about. So how will this look your next hour of your life, or 50 minutes? I'm going to pass the reins to our resident AMA here, Sandra Spencer, who will then introduce herself and talk a little bit about her topic and who she is in the space, and then we'll open the floor to you to ask your questions. So whether you're on Zoom or Facebook, we encourage you to, again, say hi, introduce yourself if you haven't already, and ask your questions, which I will monitor, so feel free to send those in, ideally through Q&A. If you send them in the chat, I'll probably see them, but Q&A will definitely see them, so let me know. So on that note, that's all I have to say, and I will pass it to Sandra. I'm just going to I'm going to stop the share. Actually, I just wanted to mention, I will put this slide up at the end as well, and I wanted to ensure that you had contact information for Sandra, so you can email her, you can book her for a call, or you can connect with her. So we have some information down at the bottom there for that, but I will make sure you have that at the end as well. So I'm going to stop sharing so you can see Sandra's face more easily. Actually, I don't know if that made a difference for the viewers. We see a different thing than viewers. So passing to you, Sandra. So please do introduce yourself. Let us know who you are and why you're excited about this topic.
Yeah, so thank you, Melanie, and happy to be here with my Volition hat. So as you know, I'm Sandra Spencer, and in my capacity here today, I am an advisor with Volition Advisors. So I'm one of many talented, and I wouldn't necessarily put me on the top of that talent list, but advisors that are part of Volition, and they have a wonderful platform for being able to connect as needed and based on expertise for your startup. So certainly do recommend checking that piece out. Generally, my day job right now is I run the University of Alberta Health Accelerator at the university. So I'm supporting a number of researchers, students, faculty on spitting out health technology and commercializing that into a startup. Some of my history and the context of being here today in this topic really does stem from my experience working with Valhalla Private Capital. So they started as an angel group and have been in the space for a number of years. And my work with them involved running their Basecamp program, which is around how and when and if you should raise capital. And that really sparked this topic for me for sure, because it's something that I do have a lot of conversations with. I've worked with a number of startups in a lot of different industries over the past 10 years in the innovation space across Canada and internationally. And so this is a really important topic, I think, because all startups have money on the mind in some form or another, whether it's cash flow or raising. So it's just a really important topic, I think, that is always on top of mind, but I think really does need to be peeled back a little bit in terms of understanding why you need money, what type of money you should be going for, and really starting to ask some of those questions for yourself, because the pros and the cons of an entrepreneur, as I typically say, is that the pros are you've got a lot of options and decisions and paths forward, and a lot of times you get to blaze new trails, but it also becomes kind of a con because sometimes there's so many different decisions that can be made, and it's very unique to the entrepreneur, and sometimes that can be overwhelming. So it's a blessing and a curse in those ways. So happy to dive into that conversation and help kind of figure out what that path forward might be for you and your business, not just for your industry.
Amazing. Thank you, Sandra. And I think that if anyone knows you well or has worked with you, they know that you ask really tough questions. When people come to you, you really challenge them to dive into whatever they're doing, if they're choosing to raise or not, and ask those tough questions. And when we talked yesterday, you'd mentioned that there's two pieces to the conversation, as you alluded to here, around should I raise, and then now that I've decided to raise, what does that look like? So I'd love to start it off by getting a bit of your insight on the should I question. So what questions should you be asking yourself if you're sitting in that seat of I'm not sure if I should raise or not, regardless of the context of what's going on right now, because we'll get to that later, but just in general, what do you challenge people to ask when they're in that seat?
Sure. So I think, when we talk about raise, just I guess to clarify, we're typically talking about raising private capital from some form of an investor. Usually, if you're having this conversation, you're at that first step of raising. So it's usually friends, family, maybe some angel investors that you're starting down this path. And I think the most important thing to take into consideration right off the bat, maybe it's not a question at first, but I think it's understanding what that relationship is. I think a lot of people don't really realize that there's two sides of raising capital. There's the investors who are looking for an investment that are, have certain characteristics as an investor. And it's important to understand that perspective and that point of view, because I think a lot of the times it gets forgotten. It's because there's so much focus on, well, I need money, so this is an option. And so you don't want to be in that place. So I think what you need to consider is really the investment space. So why do investors invest in capital? I think sometimes entrepreneurs can not maybe intentionally, but take it into consideration as if it's philanthropic. And it's not a donation. So when you start to really think about the context of an investor and put yourself in their shoes, and I think this is a really good exercise of, first of all, if you had an extra $10,000, and I ask entrepreneurs this all the time, if you had $10,000 today, would you put it towards this business? And a lot of times there's hesitation, or it's an answer of no. And right away, then I say, well, why would an investor put this money in your company then? Well, how could you go and ask somebody else to do the same? And I think that just, again, gets people starting to think about the fact that it is intended to be an investment. No different than you might buy a piece of property or a mutual fund or something like that. The investors are looking for a return on investment. So how do you then show them there's a return on investment? And so then what you need to have on the other side is an investable business. So how can you tell the story that you have a thought, a vision, a plan, and we know this is going to change, and investors have usually gone through this route and they know that path is going to change, but you need to sell the story of the growth of the business. It's not about a product. It's not about a service. It's the growth of the business and the potential to take on a large market. Because any investor, yourselves included, want a return. And so you need to be able to show that. So first thing you have to ask for yourself is, do you have an investable business? And have you gone and done the work that is needed? And some people, there's some pushback on this because it's like, well, I need money to do some of the work, but there's a lot of things you can do with sweat equity and good old just putting time into your business. And so you need to be confident in that if you're putting money in, you can feel confident going to ask for somebody to put money in, because you can show them that return of investment. Because that's, again, what the investors want to see. But the other piece is, even if you have that story to tell, you also need to think about what your personal goals and objectives and visions are with the company. Because once you take money into your business, you now have essentially partners and co-founders. So you think about this when you're getting married, you spend a lot of time courting or dating or whatever, right? And it's very similar because you're making a commitment. Somebody's becoming an owner in your startup. So you need to be mindful of what that means when you are taking on that capital, because some people just don't feel comfortable. And if you get into that situation, not realizing what you've gotten yourself into, that's where a lot of conflict can come in, and it can be detrimental to the business if not everyone's on the same page. So I guess the things to consider, I would say, for an exercise for yourself is, have you really taken a look at your own business model, done some of the work, put some of, the testing and validation. I'm a lean startup junkie, so I love the lean startup methodologies of testing and validating. So have you done that? Do you have a growth story to tell? And do you understand where the investors are coming from? And if that's the case, then you want to find investors that align with you. You want to understand what the relationship you're getting into with them, and that there is going to be, once you seal that deal, you are on that path forward to grow this company. And if you're not sure about that, I would really consider if you want to go and raise capital or not. The other consideration is just knowing that investors are not all the same breed of people. It's not like you go out and I have an accounting degree, so we're all accountants and we all use the same methodology. They're all very different. So it's also important to know who you're bringing into the fold. I mean, banks are all kind of similar, but angel investors are not, and even venture capitalists, when you get further down in your raise, they have different methodologies and different ethos. So it's good to understand, again, what's important to you. There's impact investors, if there's a lot of social components that you really want to lean towards. And so it's really important to get to know investors. And even through that process, you might find that that's not the pathway you want to go, and you don't feel comfortable bringing somebody into the fold, or you haven't found somebody. That might be another reason why you might not raise, in which case you're bootstrapping your business. I mean, the investors are looking for that hockey stick that many of us hear about, the hockey stick growth. We know it's not necessarily a true story that you're telling when you're pitching, but the point is that that's what you're trying to do, and things are going to change as you go, but that's the goal. Versus bootstrapping is typically more of a slow growth, and there's nothing wrong either way. It's just you need to understand what it means when you go down one path or the other.
Thank you. We did have a question, but then you ended up answering it in your answer. So
Okay.
Thank you for that. So I know that you also have really good example, at least you have a good example of one of these situations where people do think that they're going to raise, that they need to raise, and then necessarily have decided to go in a different way. So I was wondering if you could share kind of a real life example of working with a client or with someone of when this was the case.
Yeah, and so I worked with somebody who they had a product, and they're in the event industry, and they were pretty sure they were going to need to raise capital. I mean, especially with a product, I think there's a lot of things that have now put us on this pathway that there's an assumption that it just is part of the steps of a business is raising capital. And I think, Dragon's Den and Shark Tank and those kinds of shows put a lot of people that just that's just what you do, but it's not. I mean, realistically, there's a very small amount of startups or small businesses that actually go for private capital and get it, because there is such an expectation for high growth. So, she kind of went in thinking that this is what I need to do, and had participated in some of the training and came out the other side and said, I'm not going to raise capital. I mean, and it was just really within 2 days of kind of talking through what it really meant. And it was doing the exercise of putting yourself in the investor's shoe, understanding what the expectations are. And that's what you are selling to investors. I mean, I think, people think it's capitalism, and, there's some greed around it. And it's like, well, it's their money, and, it's very high risk money, and they know they're going to lose a lot of it. So, you need to understand that commitment you are making going into that, and that this is the path forward, is that it is about growth and it's not slow and steady. And that's why you're taking that injection of capital, not just because you need money, because every startup thinks they need money, so they think they have to go raise. And I think that's a big disconnect. So for her, it was realizing, what, this isn't the best route for me. I don't know that I'm going to, skyrocket in 5 years, or that that's the business I want to be in. I mean, you start bringing in investors, you have other people making decisions. You know, there's nothing wrong with building a small business, and you can still have a big team of employees and build an executive team and really scale. You just find other ways to do it. And the absolute best way you can finance a company, dramatic pause, revenue, sell something, go sell it. And, you know, she realized it was something she could do right away, and you start to reinvest and you start to scale on your own. And she found other alternatives for getting the capital she needed. And it becomes a different plan. I mean, you can still create a business, but again, it's that conversation of there's lots of different ways you can probably do it. And I always challenge people, I can probably show them 3 or 4 different ways to even solve the problem that they're solving, or revenue models. I mean, just go look. Innovation Board has a great breakdown of all the business models. I mean, they all start from 3. Most of those business models can probably apply to what you're doing. So it's find the one that works for you. Some of them will grow slower, but you have more control, and, you know, maybe you want to create that smaller dynamic, or you want to just get in and skyrocket. And keeping in mind, investors are looking for an exit. They want their money back. So if you're looking for something, you want to run this business for the next 20 years, might not be a good fit for you for raising capital. So, you know, you really have to understand what are your goals. I always ask entrepreneurs, what are you doing in 10 years? Would you put $10,000 into this right now? And, you know, if you say, I'm running this business, I'm the CEO of this thing, and it's running in Edmonton, and I might put $10,000 into it, but I don't think I have to, you probably aren't the right person to go raise capital. I think you just really have to understand what it means when you're getting into it, and that there are options to do it otherwise. None of it's easy. So yeah. I think, you know, if you're raising capital because you need money, just because you need money, that's not a good reason to raise capital. If you're doing it because you just think it's going to be easy, get a bunch of cash, get some people in, and they're going to do the work for you, you should not raise capital.
Right. Okay. There's so many good pieces here. Thank you for that. So I wanted to move into, because I know there's a lot of questions around the COVID context and beyond, into this pending recession that we're looking at. And people are asking a lot of questions, or have been asking questions on our channels around how does the current context affect the decision on whether to raise or not? Or do you feel that it does affect it?
Yeah, I mean, I think ultimately it's going to affect it. Just the overall impacts on the economy, I think, have people thinking differently. From the conversations that I've had with some investor groups, and I've participated in some conversations with the National Angel Capital Organization in Canada, which is a great resource as well, something to look at. They've been having a lot of conversations, and what I am hearing is, depending again on what stages. So if you're just starting to raise capital or contemplating it, I think it is going to be a little bit challenging when you're looking at kind of the friends and family and those initial injections of capital, because, you know, those are usually not necessarily accredited investors. So, you know, they're going to be a lot more cautious and risk adverse to where they're putting their dollars. And most investors, they don't just angel invest, right? I mean, they have a portfolio, and they are, you know, stocks and all these other pieces that have taken a significant hit. So being mindful that people are, I think right now, because it's still early, people are kind of stopping and assessing a little bit, because it's, well, what was the impact on my portfolio? What does it look like when I can recover? How much of this risk money do I have? And especially, I think, for angel investors, this is the high risk money, but right now could also be very rewarding, because it doesn't have, you know, some of the ebbs and flows of some of the economic markers that we see. I mean, if you have a good startup, you have a good startup. And as we can see, even in times of crisis, there's a lot of new opportunities that arise, and there's still things that need to happen. So there's still the potential for very investable businesses and opportunities for these angels to recover maybe from some of the hits that they've received in their other portfolios. So right now, again, from that early angel investor point of view, I mean, I've had, again, conversations with other angel investors, and I think, you know, the thought is angel investors are angel investors. I mean, yes, they might be hit on portfolio, but if they're real angel investors, they're still going to be active. They're going to be looking at their portfolios. Those that have raised some capital, lean on and go check in with your investors if they haven't already done that right now. I think that's where a lot of investors with this crisis have gone to check in on their portfolio companies, seeing, how are they planning to weather the storm, because it's their current investments that they're checking in on, giving some time there and support. So I would encourage you to lean on your current investors if, it's a matter of planning, looking at worst case scenarios, adjusting some cash flow. If you need some, urgent help to course correct, I think they want to work with you on that. The other thing is, I think those investors are also going to take into consideration if they might need to bridge or put an injection of capital in their current portfolio companies, which could maybe impact new investments in the short term. I think right now it's a little bit of damage control of, who's course correcting and who's not. And it sounds like, most people are, and again, the investors want to work on that. So I think that's the first thing. Coming out of the other side of that, I think there is going to be opportunities to raise some capital. I would say it's probably not as imminent as some people who are maybe like ready to go right now. And I think the other thing to consider is a lot of people just assume, you pitch and get a check. And like, it's a very quick process, and it's not. I mean, to my earlier statement around, this is a relationship. So, I mean, you want to start having conversations with investors, keeping them up to date with what you're doing. I always recommend having like a new update type of a newsletter or email that goes out regularly to update the people who you have had contact with, to just remind them that you're still here, let them know some milestones that you're hitting, and starting to warm that relationship for when you are actually ready to raise capital. You should be starting to raise capital 6 months out. And again, in this climate, if you think you were going to start raising in the fall, you should probably start getting the feelers now, because you'll probably secure it at the same time. So I think it is building those relationships. I think being sensitive to the fact that people are doing a bit of damage control in their portfolios, but I think they still want to see deal flow. And I think there actually could be more quality deal flow coming out of this. I think the reality is entrepreneurship and the startup world has kind of become sexy. And so there are a lot of people that, kind of dabble in it, but not everyone's going to make it that mile. I mean, again, this is something that's hard, and people learn the hard way that it's hard sometimes, but I think it might slow down the pipeline of startups that we're seeing, because either in the sense of people are just going to be looking for salaries. That said, it also might open it up because there's going to be a lot of opportunities. So the quality of deal flow, I think in either case, is actually going to be better. And I think that's going to pull investors to want to invest. And again, I think there's, as much as it is risky, it actually might be less risky than the volatile stock markets right now. So, we have to think of it in that way. So I think it's still the same processes. I think you have to think a little bit sooner, and you need to build the timeline of actually getting capital. But it's going to be more critical than ever that you show you have that investable business. Again, it's not just going to be about, hey, I'm doing something in COVID, and so you should invest in me. They still need their returns, and they're going to want to see that return more than ever. So, being really diligent about how you're positioning and pitching, and being able to communicate your story. So, Volition pitch insert here.
Plug.
Melanie is running a virtual pitch workshop coming up. To the details, but understanding how to share that opportunity with investors is going to be more important than ever, and just giving yourself some time. I think showing in the past, I would say outside of these times, it was you're showing growth and you're showing real fast. And your willingness to invest and take some risk. Investors want to see that, you want to do that growth. I think the shift on that is going to be, they want to see that you actually know how to handle this crisis. So, they want to know that maybe you have buttoned down your cash flow, you have a plan for getting through this. You're not being maybe as aggressive as we typically would be, or they might want to see of, pursuing that growth, because they want to make sure that being too aggressive doesn't drowned you during this crisis, that you can get through it and then ramp back up. So I think that's going to be the shift in terms of the pitching.
Okay, yeah. I have a question that's come in here. It is long. Okay, so essentially what this person is asking is, let's suppose you've invested 30%, so 40K in your software service, and you need another 70% to finish developing the backend or finish your backend development. How would you go about addressing the investment risk for an incomplete product? Where would one go? What are the must-haves in your pitch and plans and milestones? What should you do when your finances are running dry? So essentially the question is, how do you pitch when you have an incomplete project? Like, what are how can you intentionally do that in a way that's going to incite action and incite people to want to invest, even if you don't have that complete product, and what to do if you are running dry on finances at this time?
So I think, this is not uncommon. With Valhalla, they run forums once a month. And we see companies coming through there all the time, essentially ready, and that have gone through their selection process. And many of them are pre-revenue. Now, in terms of product, I guess I would say it kind of depends. And again, I would have to go back to when you're pitching, it's not about the product that you're pitching, it's the business opportunity. So you do need to be able to articulate that when you give me this money to develop this product, this is what I'm going to do. This is why the market is going to take it. And this is why they're going to pay the price for it. And this is how we're going to make money on it. And this is why we're going to take over a certain amount of market, and, not getting into service addressable market and total addressable markets. Those are good for maybe adding context, but they're unrealistic. Everybody pitches, oh, I can get 1% of $1 billion market. Everybody pitches it. It's always false, and everybody knows that. But the point is can you show that there can be some traction? Right. Now, I think the caution I would say with you is right now, the focus is probably on developing the product, and you see that as direct cost. But I think you need to reassess on how can you show that traction without maybe just dumping into product. Because if this product hasn't seen a customer yet, that's what you need to do. So, I'm a big fan of minimum viable products. Can you show that can you validate that the problem you're solving exists? Can you show that this product will solve that problem? And to prove that, we've done some tests or some validation on components of that. We have people interested, we have signups. It can be, it's as simple as even putting up a website with your value proposition. If people click on it, even if they don't go anywhere, just them clicking on it shows traction and shows interest. So there's a lot of ways that I challenge, because I think people just think, well, I just need to build it. If I just build it, I can sell it. And they just want the money to build it. The challenge is going to be, well, why should I give you the money to build it with the hopes because you think it's going to work? Nobody, unfortunately, harsh statements, nobody cares what you think. It's what the customers think. That's the bottom line. They want to know that people are going to line up for this, that people have a problem, they understand it, and they see how this is going to help them, and that they want to purchase it. And if you can tell that story to the investors by doing some of that sweat work of market research, understanding your customer market, doing some testing, getting out and talking to customers, it can be even just signups of interest, build a spreadsheet with emails on it, show examples of, analogous products that, where you see that opportunity. Why you might have an exit at the end is another piece of that. If you're building out a technology and, Google is scooping up technologies in that space, that's interesting, right? Because it might just be a matter of you just need to get it to a certain distance. It's a technology they're interested, you get the exit. Investors will put money into that because they can see where their return's going to come in. If I put 100,000 in today and we see a $10 million exit in a couple of years, that makes sense to me. So I think that's really what you need to look at, and leveraging dollars as much as possible. There are grants. There is a lot of funding opportunities. that that are non-dilutive, so not taking equity in your company. So you really have to show that you've really been gritty on doing it. And that's why I said, like, it is a lot of work, but if you can show, you know, you've looked into it, you learned some lessons, but you've done the most that you can with this business, that's going to help you. And of course, use the Pasoyas model. Shout out to Paul.
Awesome.
Go to the pitch master class to figure out.
Yeah, it's great. Thank you for that plug. I put it in the chat, and we do have pay what you can model as well as pay it forward. You can sponsor someone else to be in the masterclass. So check that out. Okay, yes, I've been listening on and taking lots of notes, which is fantastic. I was going to ask about how do you finance your business if you aren't raising capital, but you've already touched on revenue and grants and some other elements of that. If anyone has more questions about that element of how do you finance a business when you aren't raising capital, or if you're a long way out from that and you still need to do some, you need to raise money for something, then feel free to put that in the Q&A so we can answer that. But otherwise, I wanted to move on to the second group of people who are the ones who've decided that they do want to raise, or that it's a good fit. And because you said, when we talked in the past conversations, you said you have a lot of conversations that are people who've already decided to raise. So, and often the question is around, if you feel you should raise, what does that mean? And how does the current state impact those who are currently raising? So they're not doing it in the fall, they're in their mid-raise right now.
Mm-hmm. Yeah, and I mean, I guess, again, it speaks a bit about the relationship piece. And I always challenge entrepreneurs to, I think it's easy to fall into a feeling of kind of like, I need money now, I'm desperate, and it becomes panicky because if I don't get this money, this thing doesn't move forward. And so, you know, it's always like this vulnerable position when you're going to raise capital. And again, maybe this becomes a bit of that checking in as to whether it's the right decision or not. But if you really feel good about the opportunity you have, usually investors will find you. I mean, there's been deals, Skip the Dishes is one of the deals that, you know, happened where the investors were literally fighting to get in because they saw how good of an opportunity it was, and like tracking them down to say like, hey, I want in. So, I mean, if you have a good deal, people will find you. And again, if they don't, it doesn't mean you don't have a good deal, but, you know, it's something to be thinking about of what makes a good deal. So, you want to start early. And again, because, you know, going to one bank or another, it's kind of easy to compare, but, you know, especially early angel investors, everybody is different. Again, they all have different portfolios. And the other thing to keep in mind is if the investors that you're talking to might be a really good fit, but they just might not have liquid capital right now. I mean, you have to remember that, you know, the people, if you go, and again, this is putting in yourself in the investor shoes and ultimately subsequent entrepreneur shoes. If you come to me with a deal and you actually don't intend to be willing to dilute yourself, scale the company, you know, a lot of times it requires hiring a new CEO because you're probably not the right person to be running this big company. That's the reality. And kind of run that whole hockey stick to do what you need to do to get that exit. What happens is investors put their money in and you shift gears and say, well, this is great for me because we're slowly building this company and I built myself into a position where I can get a nice salary as a CEO, but it's not really positioning for an exit, or you're not looking to take it public. You've just locked up all that capital. And if we don't get investors out of those deals, they can't invest in you or the next person, right? And so that is something to take into consideration. I think people get worried like, oh, I didn't get a check. It's like, but did you know who you were talking to, and did you know who was in the room? Especially at forums, is people are really interested in deals, but maybe they don't have a lot of liquid cash. And you have to remember, you're not the only deal they're looking at. They're looking at a ton of different things and often in a lot of different industries. So you have to show that you stand out from that, or you're finding the right types of investors. And I think people just want to pitch to anyone who will listen, but you have to do the homework too. Who do you want investing in your company? Who do you want to work with? Some investors are super hands off and just like, it's up to you. And that might not be what you want. Maybe you're looking for smart money. Maybe you're looking for somebody who has a gap of a skill set that you're missing. So you want to be really thoughtful of what it is you're bringing into this business relationship and be deliberate about where you're finding that capital. I work with a lot of health tech companies, and that's a super high risk space. I mean, if you're investing in a cure for cancer, it might be 10, 15 years before it gets to market. There's only certain people that are going to have that appetite. So it's really important to be thoughtful of where you're going and build those relationships early. I think that's, again, that the big piece is getting to know the different types of groups and the different investors. You know, even some of the funds, a lot of funds are starting to dip into seed. So you want to understand that side and build those relationships early and get out there and know where your weaknesses are. If you need practice pitching, or if you're not the person in your company that should be pitching, be open to that. I think some people are just adamant, like, well, I'm the CEO, I should be pitching. That's true. I would agree you should. But if you're not the strongest, then maybe there's another executive on the team. And to that point, something I did want to add that I think is important for this conversation is we kind of talk about, like, should I raise or not? And it really, I think we've been talking about it in the context of equity or not equity. But it is important to understand that there are other tools and deal structures that you can bring to investors. And something that has become a lot more, certainly popular in the Valley, is like SAFEs, which is a simple agreement for future equity. I always got to remember the acronym on that, which is very similar to a convertible note. So I'd say Canadians are very open to more so convertible notes. And basically what that means is, I think I can build a high growth company, but we're still not quite sure. It might just be a straight growth company. So can we take some money now? But there's usually terms on that of interest. So it basically means I'm going to do a lower interest because this could skyrocket and I might want equity in the future. So the value to the entrepreneur is that they aren't giving equity away right away, but they're also getting a lower interest rate. And the investor is not taking on a bunch of risk on equity that might not go anywhere, but they have the opportunity to go in later. So I think that's an important thing to take into consideration too, because when you're thinking about, do you want to do that equity relationship, if you're not sure, a convertible might be an option, knowing that you might do that later. So it gives you a little bit more flexibility, or you can do full debt. I mean, there are investor groups that you can just go and ask for a loan. But again, you have to be able to service that loan. So having some sort of revenue certainly puts you in a better position to negotiate where you get your dollars from. If you have some sort of revenue coming in, it could be a private loan, it could be a convertible. You have more options with going to some of the public institutions, of course. So, you know, again, pushing for that revenue will give you more options, but I think it is important that there are private options for securing capital. And there's some funds that are dedicated just on doing debt, and they'll secure your debt against your shred credits. So OKR Financial is a group that does that, and they've funded a ton of startups in Canada. They're based in Calgary and Kelowna. But it's been a great option. It's usually more for short-term financing. But again, I think the biggest question you absolutely need to ask yourself in every one of these situations, and going back to what questions do you ask on should I raise? Why do you need the money? Why are you actually raising, and do you need the money now? Because again, you know, the earlier you go to investors, of course, you're giving up more equity because there's not value there. They're putting the money in to create the value in the company. So, you know, you're going to lose value for yourself. You're going to lose your percentage the earlier you go. So create as much value as you absolutely can in your company. And value comes in the form of IP, team, who's your customer. Those are the three of the biggest pieces that are going to generate value in your company. So if you're not working on those pieces, you probably should refocus, because that's where you're going to bring in the value.
Okay. Thank you. So we're getting into our last couple of questions. So if anyone has any questions, whether you're on Facebook, I know there's some people watching there, or whether you're here in Zoom, please do let us know if you have a final question for Sandra. Something I have been asked a lot is, because you're talking a lot about relationship building, this is something that Paul Broussard, managing partner of Volition at last week's AMA, he talked also a lot about relationship building. I think this will be a theme we'll see each week. But a question I'm getting a lot right now is, how do I relationship build in a virtual space? When is it appropriate to reach out? How do I reach out to an investor? What are the actual words that I use? How do I find these people, and how do I reach out to them right now? Do you have any insights or tips or tools around that?
Yeah, I mean, I always say first, really take a good look at your network. Because I mean, I say this very similarly when you're looking for advisors for your company or anything like that, any of those types of people. I think a lot of times you forget to look in your own backyard. Your friends or your parents of friends or cousins, aunts and uncles, you realize so-and-so's an accountant, and have conversations with them, because they're a lot easier to connect with right away. And, it can be kind of a personal thing, but you can start to talk about what you're working on and see, are they willing to make some connections for you? I think warm connections always help. So, to me, that's the first thing, is really look, because I don't think we always do that as, professionals, to say, well, in my peer group, in my family group, there's actually people in here that could really, support me in what I'm doing. Again, they're going to be a lot more open to having that quick conversation. Right. And so that could be a way to start to expand out and make some of those connections. So that's definitely first. I think the next thing is, doing your research. So finding out, who do you want to connect with and why do you think you want to connect with them? I think, it is a tough space because there's just a lot of noise, and the fact that most people are working from home, emails are coming in through the roof. There's a lot of messaging. Everybody's on their, so there is a lot of messaging going on. Right. So I think you need to have some value. So, is it somebody who is going to be in the space? Find some piece that can connect of, hey, I know you were doing this. I thought you might be interested here. The other thing is, of course, tools like LinkedIn, you can often find a similar connection. And so same with that kind of concept of your peer group and your family group, but also if you find somebody that you do want to connect with that is in the space and invests in the space, has invested in the space, maybe find a mutual connection and see if you can get an email that way, because that'll, push through versus that cold email. I think the other piece is, again, understanding the who's who in the space and making sure you are doing that research. The other thing is other entrepreneurs. So if you have a group of other startups or entrepreneurs or people who might be in a similar space, I know it can feel competitive and it shouldn't be, but maybe they have some connections for you, or investors, or maybe investors they talk to that weren't interested in what they're doing, but might be interested in what you're doing. So, tapping into your peer entrepreneur network. So I'd say those are 3 ways to really try and find and get those warm connections. And then the other thing is, I think, is just, getting your face out there. You need to be, whether it's pick a platform on social media that you're going to be active in, follow the people that you want to follow, or that you want to follow you, so that you're getting your face out there. Because again, it's not always going to be that first connection. You have to put yourself out there, and it is a marketing strategy for yourself and for your business. So I think that's the other piece, putting yourself out there, getting involved in webinars, things like this, activate on the chat channels, always take an opportunity to tell people what you're doing, because you never know who's going to hear or who's going to have that connection for you. So you have to get used to always talking about what you're doing. And if you're passionate and you believe in what you're doing, that shouldn't be hard. And then once you do have some of those connections, I think it is that recurring check-in of, maybe it is just a monthly update, but not just for the sake of blasting people. There has to be some purpose. So if you have an achievement or something with your startup, you should be sending out a message. Here's a press release, or we got our first customer, we got some successful tests. If you have those milestones, again, not if you're having them every day, that's great for you, but probably not something you need to do. So that balance between, probably every couple weeks if you can, but if you have something to say. And I've seen people do, you know, really nice MailChimp updates of just, here's what's going on with our company, here's our recent milestone, you know, showcase a bit about the team and build that rapport.
Amazing. Thank you. There's so many little bits and pieces. If you're watching back on this later, take notes. There's so many actionable things that you can do.
There's a lot to talk
There's a lot. We're already talking about how can we turn this into blog posts and such. So make sure you're taking all the notes. I have so many more questions, but I'm cognizant of the time. So I wanted to hand it to you to say, is there any last thing? I know you have a favorite quote that I love, and I know you have a soapbox you like to get on, and and you've already shown us that you're like asking tough questions and such side of Sandra. But if there's anything else that you wanted to share on this topic right now, then I would love to hear kind of your final thoughts that you'd like to share.
Yeah, I think the biggest thing is just be willing to talk to people about what you're doing on and what you're working on, and where are you getting your support, and people who are going to challenge you. I mean, again, I have a ton of conversations and I just ask questions because I can never, I'm very mindful, and this is something I would say to everybody, of advisors and I mean, I am an advisor, so, you know, cognizant of that, but of telling you what to do. I think, you know, sometimes we can't help it because we see a vision, and this is myself included. And I actually try to be very mindful, and I'll contradict myself on purpose to force you to make your own decision. But I think that's the hardest part about entrepreneurship is it is a new path forward, even for you. I tell people, you know, even if you're opening a Tim Hortons and you think it's, I mean, every Tim Hortons is the same. It's a franchise model and it's no business in a box. It's not, right? There's going to be differences because the manager and the owner, there's going to be nuances, there's going to be cultural things. No two businesses are exactly the same, and the only difference is you. And I'm an accountant brain, so I have a hard time with that warm and fuzzy stuff of like, you know, it's just, this is what you do. But it's actually the truth, and it's the biggest thing. And the more you come to terms of, this is why I'm doing this, and how is this going to affect what this business could or should be, keeping those things in alignment is going to be really important. And everything that comes into you in terms of feedback and support needs to be cumulative of everything, because nobody knows your business better than you do. Nobody. Because you've been in it from the beginning, you know what your vision is. They understand maybe your industry or the type of business, but you do have to make those decisions for yourself. And I think the biggest struggle for that is entrepreneurs are looking for, like, tell me what to do, right? Like, help me.
Yeah.
So the best thing is to try and resist that and know why you're making decisions for your business and making good informed decisions. I think that is a really critical piece, and that you have to be fluid because every day you're learning something new. So I'm an anti-business plan document person, and I've changed my thinking on that because it's the journey of business plan to make sure you've taken into consideration how you're built, what are the components that are important about the business, and that those will continue to shift. But it's not about just sitting and writing a document. Well, now I have this plan, so now I'm running a business. That's not what it's about. And I think that's really important because, again, talking to Melanie about, you know, everyone has a plan till you're punched in the face, Mike Tyson, right? And I know Melanie's used it, and it's something I've used for a long time.
Favorite.
Because it's true. I mean, COVID's like a big punch in the face. It is a Mike Tyson punch in the face, but it doesn't mean it's going to stop you. It's what you learned in building those plans is going to help you to adjust. And I mean, that's why my company is called Nimble Strategizing, because it's about being nimble. You have to be fluid and you have to be okay with that. And that's why I struggle with, I'm an executor. I can figure out how to do things, but you know, that fluidity can be challenging for some people. Not everybody is cut out to build a new startup. And I know I'm not the person that's going to start a company. I'm the person that can help execute a company. And I know what my role is, and I know where my strengths are and my weaknesses are. And I think that's critical for you too.
Awesome. And I know that there's an event later today that you wanted to share with the community. Do you want to say anything about that?
Yeah, so obviously I work with Valhalla Private Capital and Volition and a lot of different groups, wear lots of different hats, but Valhalla Private Capital is actually doing an Ask Me Anything today as well at 4:30 on Zoom. So you can check out their website, valhallaprivatecapital.com or valhallaangels.com. If you want to join that, that's at 4:30. So there's some of the actual
Mountain Standard time, 4:30?
Mountain Standard, yeah, 4:30 Mountain Standard time. So that's at 4:30 with some investors, and they're talking about the same thing, basically, is, you know, as an entrepreneur, should you be raising capital, and what does that look like? So if it's a topic of interest to you, I thought it was definitely worth sharing and hearing their perspective and building on the topic.
Awesome. Alrighty. I'm going to reshare this screen with everyone. If you wanted to get a hold of Sandra, you can still do so. I'm just going to, there we go. The chat closes when I share my screen here, but so thank you everyone again for coming on for today's AMA, and just a reminder that we do have them every week. So a lot of what Sandra talked about today was also touched on last week, and the recording from Paul's AMA is up on our YouTube page. And next week we'll have Mira Sulin, who's another one of our advisors. And again, things that Sandra talked about today will be touched on there as well. And she specializes in promotions, or she'll be speaking to promotions, marketing, and branding during turbulent times, which, as Sandra talked about, you know, there was so many pieces around marketing yourself and that brand awareness element and getting yourself in front of people. And like this time right now that we have is a really good opportunity to do that and to reach out, have people see you, start liking things, start sharing things, start commenting on things. Someone needs to see you like 22 times now to remember you, I think is the number now. So it's, whether it's investors or it's clients or customers or employees or partners, whatever it is, you need to get your face out there. There's a lot I loved. I literally have like multiple pages of notes from today. And I love the questions you're asking us to ask. And, you know, around, you were talking about what, to ask yourself, what are you going to be doing 10 years from now? If you had $10,000, would you invest in your own company? Do you have an investable business? Like, these are really core things to be considering. And a little soundbite that you said that I loved was, no one cares what you think, it's what the customer thinks that matters. And I know you're like, that's a harsh thing for me to say, but to me, that's like a very Sandra, very challenging, very normal. Yeah, so let's just lean into normal Sandra conversation.
That's right.
She does ask hard questions in the best way possible, and really gets you to dig into what you're doing and if you are going in the direction that makes sense for you, because there's so much noise out there telling us what to do as entrepreneurs. So do check out Sandra. You can get a hold of her via email at sandra@nimblestrategizing.com. As she mentioned, Nimble Strategizing is her company. You can also book her through pickmybrain.world /profile/Sandra Spencer. And she does everything from 30-minute sessions up to, you can book her for multiple sessions that are hour-longs, or you can just connect on her on LinkedIn and start liking her things and sharing her things. Get on her radar. So thanks everyone for being here today. We will, this will be up on our Facebook now, and it should have recorded. It looks like it's recording, and then I will have it up on our YouTube as well. And please continue to send in questions. If we get questions after this wraps up, we will continue to pass them to Sandra. We'll get them to you in some way. We'll get on our social media channels. We'll make sure they are answered. Amazing presentation. Thank you so much, Sandra. That's what people are saying in the chat. So if there's any last words you want to say to Sandra, please do share them now. And I will be stopping this live presentation in about 30 seconds. So you've got your—
Or let me know on LinkedIn, build your network.
Yeah, exactly. Yeah. Ask your questions, build your network, do everything that Sandra said. All the things. Yeah, it was incredible. Thank you so much. All right, so I'm going to close now, and we hope to see you again next week and at our future events as well. volitionadvisors.com/events. You can check out everything that we're up to. Okay, thank you so much, Sandra, and thank you to everyone who came as well.
Thanks, everyone. Thanks, Melanie. Bye.
Bye.